Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, October 9th, 2009. Well, folks, today can be referred to as the stereotypical Friday action ever since the March lows were put in. And what I mean by that is if you look past at the past Fridays, basically 8 out of every 10, 9 out of every 10 Fridays in the past since the March lows were put in have been just basically a flat to slightly positive day. And that's really what we're seeing today. The market's basically staying in a very tight range. There's almost no volume in this market. We've only traded 81.5 million on the SPY, which again is probably on pace to be one of the lighter trading days of the year. Again, very interesting to note that we're in the October time frame. Usually there's heavier volume here, but again, the markets are very, very quiet here. The markets, again, with that light volume, are slowly floating up near the highs of the day right now, although it's in a very, very tight range on this market. The Dow right now up 45 points, the Nasdaq's up about 10, and the S&P's just up about 3 points on the day, basically 1/4% to 0.5% across the board on these indexes. Now, the stereotypical Friday, guys. So no surprise there. This is what we referred to yesterday in our nightly video to our Research Center subscribers to really look for this kind of thing. I mean, it's 8 out of 9 out of every 10 times. So at this point, you just have to be used to it by now. You have to expect it and just constantly look at it that way. Now, a couple things to go over here. Number one, initially, this was the signal of the day. The first candle of the day told us what type of day we were going to have, and I want to explain that. Number one, we really didn't have any economic data out in this market, and I want to quickly go over that. The Commerce Department did release some trade deficit numbers and showing a decline of 3.5% to 30.7 billion in August. And again, that was really only on oil demand declining, which caused imports to fall. So please understand that really that's a little bit of a skewed thing. It's not like we started exporting more or importing less. It's more based on purely demand for oil. And obviously, as the economy continues to slow down here, which again can be debated based on what Obama and Bernanke are saying, that they think it's starting to rev up again. But these numbers are showing that as it declines, the economy declines, you're seeing a lack of demand for oil, and obviously when we don't demand as much oil, we don't import as much oil, therefore those trade deficit numbers will come down just a little bit. Now, first, as I mentioned just before, the first candle really told us what type of day we were going to have. To explain the technicals of this, really what you're going to look at, see the tail here and the little bit of a red close here, just a minor slow red close at the really high end of the candle. That was really the key, because what happened is yesterday into the close, towards the end of the day, we did sell off, and the last candle of the day touched the 50 moving average and then bounced off of it. Well, today, the first candle of the day on my 10-minute SPY chart came down and pierced that, and then actually rallied all the way back by the end of that candle to close above the 50. That's a signal right there. Not only do you have a bottoming tail there that can tell you upside is coming, but again, they recaptured and held the 50 moving average to the upside. Right away, I gave the alert in the chat room that probably means we're going to head towards the 20 moving average and possibly as high as 107. And as you can see, what happened, next candle right to the 20 moving average, and then the next couple candles take us all the way to 107. At 107, I mentioned there's a good level here, as you can see from the trend line that's been in the charts for quite some time now. That's your level of resistance. You can see the pullback off of that right back to the 50 moving average. Then you bounce back to 107. Then back to the 50 moving average, and then kind of just gyrate between the 50 and the white trend line, ultimately playing pinball or whatever you want to refer to as a little bit of kind of bouncing back and forth across the 50 moving average and the white trend line. Really, that's a triangle there of sorts, and what you can see is you hit that white trend line and then finally came down here and started to decline a little bit more, taking out that 50 moving average. Now, normally you'd look at that as being a bearish signal that the market's going to fall, but remember, Fridays, majority of Fridays, 8 out of every 10, 9 out of every 10 Fridays since March have been up moves of at least a partial flat day to an up move on the markets, and you have to take that with a grain of salt then. Yes, it's a nice little breakdown there, but remember, there's no volume in this market. Again, we're on pace to do probably one of the lighter trading days of the year here today. I guess everyone is taking a little breather here after the pretty crazy week of gains, and everyone's just kind of going away, and that's just creating light volume, which again, light volume favors the upside. That's what you're seeing here. Again, not a big up day by any stretch, but about 1/4% to 0.5%, as I mentioned, across the board. And so as you came down and broke down, you never really confirmed that move. And I want to just point that out. We talk about confirmation to the premium subscribers often, and you have to understand the technicals of that. That means you need a secondary close. See this candle right here, this big red one? That's your close below the 50 moving average. All right, do you confirm that move below? Absolutely not. Why? Because you need a secondary close below the tail of that red candle that's the breakdown candle. And you never get a close of any of the next candles below that. And I put a dotted line to show you yes, you pierced it, yes, you touched it, you never got a close of the next candle below that point, in which case that means there's no confirmation there and you can't trust the sell-off. And sure enough, what happens? Floats right back up, right to the 50 moving average, consolidates for one candle, and then breaks up. Where do we go? Right back to 107. So again, there's a lot of trickery going on here, a lot of key technical stuff you need to know. This is strictly stuff we teach, guys. You really can't go anywhere else and find this kind of stuff out. Again, we go into 10 times the in-depth nature in the nightly videos to our premium subscribers, which again you can go for and look and sign up at the Research Center. It includes everything under that Research Center, everything listed there, including, by the way, the hidden gems. Check this out. This is the hidden gems, guys. This is the hidden gems for this week, and I just want to show you guys. I put this out once a month. I do major proprietary research on these small caps, and again, just to show you guys, this is why it's a no-brainer to sign up, because every month I'm giving you guys one of these. Alone, each one should pay for a year subscription of the Research Center. Each one minimum, and that's if you're only doing a small amount of shares. This was a good one right here, and I'll show it to you guys. I put this out Monday night, so it came out Monday night based on the close of Monday, and I said, guys, based on a $14.36 entry target right here, this SKBI should have a massive move up. It's a Chinese biopharma company, and sure enough, just in 4 days, it went from $14.36 to $18.99. The high today, $18.99. That's almost a $5 gain, folks. Almost a $5 gain on this hidden gems. And again, that's in 4 days. 4 days. And you're talking about it was a $14 stock. So a $5 gain, you're talking about 30%. Think about it if you bought 1,000 shares of that. Just 1,000 shares at $14.36 when the alert went out. You're talking about literally almost $5,000, and the Research Center at $49.99. That's literally years and years of the Research Center, years and years. You could probably for the rest of your life almost pay for the Research Center just off that one. And that's all it is, folks. I mean, utilize the nightly videos, which are 40 minutes in length. That's fine. You can do that too. Utilize all our key levels, our master levels, our calls. Just alone in the last 2 weeks, folks, the calls based off of master levels would have yielded thousands and thousands of profits, if you will, based off our master level of 102. The bounce off of 102 took us to 107. 5 points on the SPY. You could have played the SSO there. You could have done anything there. In any case, just be aware that they're there, and for $49.99, it's a steal of a deal. You can also join the chat room for $1.99. That's fantastic as well. Play-by-play, constantly live by me and my partners throughout the day. All right, let's go back to these spiders, and I want to show you the spiders here. Here's the daily chart of the spiders. We won't focus on that. That's for the premium members tonight. We're going to go over that. But again, 107 is your resistance here today, folks. There's 107. If you get through 107, you're going to go here to 107.20. That will be your secondary resistance if you get through the white line. Right now, you can see we're basically range-bound. I mean, this is about as range-bound as you can get. You have this lower point right here at around 106.60, and then the 107. So you're basically in a 40-cent range all day today. Very little volatility. Market slightly higher on the back of light volume and just a constant kind of float for a Friday. That's pretty much standard. Those are your resistance levels up top, 107, 107.20. If you come down, you're going to look for a little minor support right here at 106.65, and then you take that out, you're going to look at 106.55 right here. And if you get through that, then you're going to look at 106.43. On the downside. Those will be your supports and resistance levels on the intraday chart to follow and continue to look. But again, strongly encourage you. I mean, that you're leaving money on the table. Might as well join the Research Center, $49.99 a month. Just alone in that hidden gems in 4 days, you probably made about 5 years subscription just on 1,000 shares of it. At least 5 years, possibly even 10 years of subscriptions to the Research Center. It's almost funny to talk about it in those terms, just based on one investment of $49.99. Have a wonderful evening, folks. We'll talk to you soon. Take care.